AMD is at a very critical level. Going to the monthly chart, you can see at the round hole psychological number of 100 that has served as support, resistance, and now support once again. But scrolling down to the weekly chart, you can see currently that price is in a short-term downtrend. However, this could be just a pullback before the next impulse move higher. Before we continue with the analysis, let's look at 3 reasons to potentially go long on a breakout on AMD. So shareholders of AMD are undoubtedly happy campers with the stock up 65% year to date. However, shareholders might be less content in the short term with shares down almost 16% over the previous 3 months. And this is the pullback that I was referring to on the weekly chart. As you know, AMD is a semiconductor company founded in 1969, and they make microprocessors, chipsets, GPUs, all for data center solutions, technology for gaming consoles, etc., etc. From a technical analysis point of view, shares of AMD appear to be gearing up for potential breakout and leg higher. This is if the stock can break above resistance near the 110 level. Now this formation is a descending triangle, and typically what happens is you get actually a breakdown. For several months, AMD has been consolidating above the previous pivot high near 100, now acting as critical support. Recently, the range has begun to contract along with a near convergent 5 and 50-day simple moving average. So what this is saying is that it's confirming that a breakout is nearing as moving averages are converging against one another. A breakout above 110 could signal a clear momentum shift and the potential for upside, significant upside. Now let's talk about the institutional ownership, because this is who, the smart money, these are the people that actually move the stock in one direction or the other. And AMD had recently experienced an uptick and now stands at 68.43% thanks to 1,507 institutional buyers over the previous 12 months compared to just 1,004 sellers. All right, this is not saying much, but this is where you put the money where the mouth is. Over the previous 12 months, 74 billion has been inflowed from institutions compared to 10.5 billion in outflows. More recently, in the second quarter, the institutional inflow was a whopping 58 billion compared to just 3.77 billion in inflows. AMD has a moderate buy rating based on 32 analyst ratings. Of the 30 ratings, 22 analysts have AMD as a buy. 1 analyst has a strong buy, and 7 have AMD at hold. Over the 3-month period, the consensus price target has risen from $125 to the current target of $135. Most recently, Morgan Stanley reiterated its rating and price target of 138, and Susquehanna boosted its target from 135 to 145. And this is probably the play on AMD getting into the AI space in terms of supporting data centers who have to computate all that information for ChatGPT and Google Bard and other AI models out there. All right, so again, just going back to the weekly chart for a second. Again, this could be just the pullback before the next impulse move higher. Now, if we go down to the daily chart, we did have a daily buyers at the 106 level, and that was considered a bear trap, which had worked out once, twice, a third time. But again, this is like as each time price comes back into the zone, the remaining unfilled buy orders decrease, all right, until there are no more, and price has to find that next level of unfilled buy orders. Now, what's interesting to note is that after this level was breached, price came back down, hit that $100 level to the T, and then bounced higher. However, again, we are in a short-term downtrend. And the pullback wasn't enough, as at the moment the sellers are still in control. Again, this zone is the line in the sand. What's interesting to note is that you do have the 200-day moving average getting closer to this zone, and that will be a good thing for the bulls, as that's going to serve as dynamic support. However, if the $92 level is breached, we could head lower. But at this time, potentially we are setting up for a breakout at some point. Again, stock is down 16% over the last 3 months. However, you cannot ignore this descending triangle formation, which typically is bearish. Thanks for watching. Subscribe. Please like the video.